This is our Forex blog for August 22nd, 2013. I'm spending 100% of my time working on trading and creating automated trading systems, which I'll show you some of the signals. You probably are not going to believe it when you see them, but basically the way I'm able to get so many very high probability signals, I think there's 2 trades today that didn't work, is because I'm now over 60 different very rare patterns that are high probability. Some of them might happen once a week or every 2 or 3 weeks. Other ones might happen once or twice a day. But combined, you have a lot of different trades that show up. And they use our statistical tools to find and buy the strongest ones, sell the weakest ones, and it trades with the trend until the market moves statistically too far, then it looks for counter trends. It also looks for double tops, double bottoms, fib targets, fib retracement levels, and basically all the tools that professional traders use. These are our currency indexes, which show you as a chart what each currency is doing. And it allows you to basically see which currencies are strong and weak. I only have the top 4 on here. You can see the dollar's trending up, pulls back, finds support to hourly, briefly breaks down here. You can see it broke the trend line over here and went from below to above its hourly moving average somewhere around 5 right here. And so you can look to buy that currency versus one that's either weak or likely to go down. The euro's up a lot. It's above its upper containment band. It's likely to pull back. The pound has been trending down, and you can see it's actually, if you've ever used trend channels before, you can kind of eyeball where those trend channels are. Notice the trend line off the high is projected from the low, found this low here. It's coming back up to an area where it's likely to reverse. Hourly moving average, point of control in the upper trend channel, which is also a trend line off these 2 highs. So the pound is likely to reverse either now or very soon. The dollar has been pulling back for many hours. The previous trend was up. It's very likely to go up. The pound's likely to go down. So therefore you want to sell the pound dollar. It's that simple. So here's the chart. And remember, that was at 5 o'clock. The pound had been trending down. It had been pulling up to around 5 o'clock. On this chart here, it's not pulling back up at all. And you have this breakdown here. You would sell there. You would put your stop over the bar's high. Typically, I'll draw my fibs off of here, and the fib targets are going to be down there. This is only about a 12 or 15 pip move. However, it was very high probability. Now, again, like I said, the dollar is likely to go up. The euro has been going out for a little over 2 hours very strongly. It's at the upper containment bands. At 5 o'clock here, the euro dollar is likely to have some kind of a pullback that allows you to get short. And guess what? The euro is up too much. The dollar has been going down for many hours and is likely to reverse. Look what happened here at 5 o'clock. You knew about it right here. And guess what? 10 minutes goes by, and then it falls from 33.50 all the way down here. 50 pip drop, pretty much one way. And this is why I have a hard time believing how anybody can use our software and not learn to trade properly. This is not even using support resistance, Fibonacci, various moving averages at work, displaced moving averages, all of our statistical tools, our perfect oscillator, and so much more. So let's look for some more examples here. The yen has been trending down. You wait for a pullback up, or if it can't get a pullback up, and the farther down it is, the more I'm going to want to see it go sideways. In this case, when it goes down this much, I'd like to see it try to go up for 2 or 3 hours. It can't get up. And so when it breaks down underneath this moving average, when it breaks the trend line off the lows here, you can pretty safely sell the yen, because it's really close to the yen index's previous day's low. And it also, this orange line right here, is last week's most traded price in all the yen pairs. So traders last week who bought the yen have positions right here. If it goes underneath there, it's likely to trigger a lot of stops. And these areas tend to get nice bounces. Most of the time when a weekly point of control area like this gets hit, you're going to get a move back up to the hourly. Notice just the previous day's point of control here acted as support in the euro. The point of control in the pound acted as resistance. What a great place to sell earlier today at 2. So this is a very high probability place to sell. and you'd want to sell the yen versus whatever's strongest at the time. The dollar's been trending up, the euro's been trending up. It's kind of holding support here. If it stays above that trend line and bounces, then you want to buy the euro yen. And also, you can watch the dollar index. If it breaks out over the previous swing high here, then you want to buy the dollar yen. It's that simple. So let's take a look at what happens going forward. The euro did what I said it was going to do, bounce off that trend line, and the yen broke down. And let's take a look at the chart. This is around 9 o'clock or so. You can see that this one's just kind of chopping around on the chart itself. It couldn't go below this level, 130, 130. Broke out over the highs. You're in with your stop underneath here. And it kind of went up, pulled back. I'd move my stop from underneath here to here. I went up, pulled back, moved my stop up again. And then typically what you want to do is draw your fibs off of that little tiny move. And typically the first or second fib target is going to be where you want to get out. And if it comes real close to it here, I'm going to probably get out of part of my trade in the second half here. I might have bought this breakout right here and I would have probably lost. I would have bought this pullback right here, and that one was an amazing one. This one shot up like I would have anticipated the first one doing, and went up 10, 20, 25, 30 pips. So I'm going to end today's class by showing my new signals. We use these on range charts, and like I said, there's over 60 different rare patterns that show up. I'm just going to show the regular signals on here. If you're part of our Facebook friends, like us on Facebook, Leverage Effects, and you can see the progress of how these signals work. Now I'm taking trades with my own account with the automated system based on these signals. So if you wonder why they're so accurate, I'm basing my entire future off of this. And I'm going to be putting it in the software in our next release, where people can get the signals and buy and sell off of them. Just looking at these today, you can see pretty accurate sell signal here. This one worked, this one here failed. This one went sideways for 15 minutes, this one worked, this one worked, this one worked, this one worked really well. This one was the end of the move. This one, if you did buy down there, guess what? Heads up, trade's not working, get out, flip and go short. It went down, buy here, it went up. This one here failed, this one worked, this one worked. Let's scroll into the future. And I'm showing the ones that tell me which type of trade pattern it is. And you can see most of these don't happen that often. T3, T4, trend 5, trend 4, trend 3, counter trend 11, counter trend 2. There's a ton of counter trend 3. This one happened to be a swinging expansion trade number 8. 2, 3, 4, 5, 6 different trades triggered on that particular bar, which sometimes happen. It doesn't necessarily increase the odds of the trade. But it's always nice to know that multiple patterns hit. Most of the time only one pattern hits. You can see that one worked, this one worked, this one you probably would have got stopped out, and then unfortunately it did work. This one worked, this one kind of pulled back a little bit, this one worked, and there was a trade just a little bit ago that seems to be going up. Let's go forward and see what happened. So that one failed. But you can see the vast majority of the trades worked, and it's very high probability. For those of you who don't have any idea how to trade, don't want to learn how to trade, and I have some other indicators on here that I test these patterns with. Most people could not look at all the different indicators that this is built from. Different trade signals use different ones. And I'm also measuring, as you can see, the swing highs and the lows. And if the price is making higher highs on the swings and during the pullback not breaking the previous low, that's a bullish sign. And that's probably why this trade here happened. You can see this made a higher high than here during the pullback. It wasn't that statistically weak at the time. It's not up too much, and you can see it went up. And so without having to learn all of our statistical tools and over 60 different patterns that are high probability and remembering in real time, there's no human out there probably, unless they're one of those savant type people that could remember 6 different trade patterns in real time and spot them on multiple currencies. It's not possible. So this is going to make trading a lot easier. Use the currency indexes to anticipate trend direction, wait for a signal, and get in. And as you can see, there's a lot of signals. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 20, 30 signals. So if you're an active trader, or if you're a longer term trader and you only want to buy breakouts, here's a double top. It broke out here, and there was a buy signal here. Our signals will add to the probability of how you currently trade now, and hopefully keep you out of some losing trades. And also, if you're in a trend trade and you get a sell signal up here at our likely reversal areas, like here and here, know that the trend's likely to reverse. So you might draw a trend line on here and wait for the trend line after you get our signal. It breaks the trend line, you get in a bar or two later if you want to wait for confirmation. So much you can do with this, and it can enhance any type of trading method.